Hi everyone, this is Penguin Trades and this is a review for the ES and NQ futures for November 13th. We're going to start off here on the ES and then hop over to the NQ and do a review on that as well. So I started trading at 8 Central Time, which is this area right here, and notice that we have these two legs up, but then on this second leg something, crazy happened. It took off, went way past the measured move, and then, pushed all the way up to here, and then as it pushed lower, that gives us our overnight low, or excuse me, our overnight high. And so as we push lower here, notice that price found resistance right on that previous measured move level. Now, it's very common for, if there's a measured move level and price goes through it, it's very common to see price push through and then give a retest on top of that level. And in this case here, there was obviously some news activity or something that made the market go crazy here. But it ended up happening way later. Usually you don't see such a huge push through a measured move of this size and then an accurate retest on it. But in this case, that's what we got. Price pushed way through, came back and retested right on that measured move level. So, it's very common for price to reverse down as soon as it reaches these levels, but if it pushes on through, then you have to consider price may attempt to hold onto the other side. So anyway, we push on up here, we push off that previous level. Now, this downtrend, I'm going to zoom in here for a sec. Notice that you have a downtrend, a break, and then a push to a new low. So the downtrend is considered played out at that point. It has a new low. When a trend gets a break, you can expect price to attempt a new extreme, because making a new extreme is how they play out. And you can look to, and price will generally start reversing. You can look to get in on the other direction. And so when price starts reversing here, it immediately finds resistance at the EMA. So that's already not looking good for a reversal higher. And it ends up just chopping around for a bit. You can kind of see there's a couple legs within that there, but overall it's really just one leg, because on this right here, which, let me back up for a sec. When we push up here, we get this small break, push to new high. So technically this is an uptrend with a break and a new high. And then when price starts pushing down here, these are the two attempts to reverse, but it fails, and that failure gives us the bigger picture legs. So you have to combine these two legs right here. Again, first leg, break, second leg. You got to combine them into one leg. Because the reversal failed, you have to look for bigger picture legs higher now, because price action levels get bigger as more time goes on. And that leads me into this next thing. At first, what I was saying was we have a downtrend with a break and a push to a new low, right? And then that played out and pushed into the reversal. This reversal, it clearly was not going very far. After this second leg up here, first leg up, second leg up, it's already it's already stalling, pushing lower here. And so what this is a two-legged break. At first, what you have is a reversal for that smaller trend, but then since it failed right here and starts pushing lower, now you have to consider that this is making a second bigger picture leg down, and that this trend is all one leg on a bigger picture. It's not just downtrend, break, new low. More price action is formed, and since it's clearly pushing on lower here, you just basically have to accept that these two legs are combined, and you need to look to get in on the second leg down. And so, which, even before it starts pushing down here, I already know that on a bigger picture, this is one leg, and if price ends up holding, we can look to get short along with it, which we know that before it starts pushing on down here. But when it starts pushing on down, that's when it's clear that the bears are taking control, this reversal higher has failed, and it's acting as a two-legged break, and you want to look to get in on that second leg down. So I hope that's clear right there. Downtrend, two-legged break, push down to a new low. So at this point here, we start pushing higher. And so the downtrend is considered played out at this point, because, again, after its two-legged break, it's pushed down and made a new extreme. So it is considered played out. However, this measured move is still in play, which I kind of have a lot of stuff going on. I'm going to remove some of this. I have these smaller legs drawn. So we push on lower here. We still have the measured move in play, and measured moves act as magnets. You can expect price to attempt to reach them. Second entries, two-legged moves, we all know that they occur all over the chart. They don't happen for no reason. They don't set up just because they set up. They set up because price is attempting to do things, such as reaching magnets, like a measured move, like a trend line, a range line. It's trying to break out. It's trying to fade. So price makes two-legged moves for reasons, because it attempts to do all those things in pairs of two before giving up. That's just how it works. That's why you get so many two-legged moves, because it's attempting to reach magnets or attempting to break out of certain levels. And so right here, price is attempting to fade. We have this first attempt to fade, second attempt to fade. It's attempting to fade this range right here, because when you have a range and price breaks out, it's very common for price to push back in, because you don't want to just immediately buy the breakout. In this case, it's a short. So you don't want to just immediately short the breakout, because just over time, we have seen that price generally attempts to fade back in. And when it attempts to fade back in, it does it in the form of a two-legged move. It doesn't always do that in the form of a two-legged move, but we want to look to get in on the trade if it happens in a two-legged move, because again, two-legged moves is generally where price gives up. So I wouldn't want to go short right here, because we only have one attempt to fade at this point. Now, in the moment, I don't know, it could end up dropping straight from there, but since it's just one attempt, it's not enough. Price attempts things in pairs of twos, so I want to wait for that second attempt. And so here, that's what we get here. Second leg up, measured move. As soon as it reaches that measured move, it starts pushing on down. At the time, this trend line was right off of that swing, and so it did break out a little bit, but had a very bearish pushback below, and then closing on its low. Great looking bearish bar, plenty of room to this measured move right here. The other measured move that I removed was this right here. So whenever a trend is playing out, there's a couple of measured moves to consider. You have to consider the main measured move, because it's the main trend, the break, and then when it starts pushing to a new low, when it forms that swing, that's where you draw the measured move. And then this is the large measured move that's in play. However, we still have to consider that after this downtrend has its break, it's the two legs at a new low. It's very common to get two legs at a new low. Those will often be measured. And sometimes what will happen is, in this case here, this measured move on the two-legged move down is really close to the main larger measured move. But oftentimes it'll be much further up, and then you just got to wait and see how strong is the resistance right there. Sometimes it'll be strong enough to give you a long trade before the main measured move is met. And so that's why I had those drawn there, just to see how price reacts. Price ended up just pushing on through all of it. And so anyway, we push on lower here. I'm going to kind of get through this a little faster. So we push on lower here, we go straight through that measured move, and then we reach the overnight low. So this is our key level. We have the overnight high and low. These are our key levels for the day, and we have a very strong reaction to it. And one thing that's pretty common to see is after price reaches an overnight level, such as this, the overnight low, it'll often push up into a failed second entry or reversal pattern within the downtrend. And so if that happens, you can look to go long inside the downtrend if it's coming off of the overnight level and you get a perfect reversal pattern with room to the highs, with plenty of room to the highs. But in this case here, we obviously don't get that. You can look to do that. Just make sure that you really understand how reversals work and, how the key levels work, because you don't want to be counter trend trading unless you know what you're doing. Usually you just don't want to be. But it's a downtrend competing with a key level, which basically act as range highs and range lows. I call it the overnight range. And so if price pushes up here, this is a strong level. You can look to go long. Channels, are basically just slanted ranges. Now, like a downtrend, obviously it has a bias. It has a downward bias, why it's called a downtrend. But when price comes off the lows, you can still expect price to reach the highs, to attempt to reach the highs. Just like in a range, when price comes off one side, you can expect it to attempt to reach the other, and then the other, back and forth. Same thing with channels. They just have a bias. However, if you get a good enough entry, you can look to get in on the move to the other side of the channel, even if it's counter trend, as long as it has good context. Because it's not a downtrend day at this point. It's just in a downtrend within the overall range. At this point, it's still a range day. So anyway, we push up here, or I kind of forgot where I was. So we push on up here. We reach the other side of this channel. I extended it to that swing as it pushed lower there. And so we got a good reaction there. Now price forms a failed second entry right here. Starting from the slow, we have first entry short, and then second entry short, and then failure. But it's right into that trend line. It's obviously holding right along with it. This is a and this is a terrible place for a reversal pattern, basically. And so even when it starts closing out right here, it got really choppy just due to the channel. So nothing in here is worth taking, in my opinion. So anyway, we push on up. Notice that we have this two-legged move up here. So we have our first leg, two-legged break, second leg up, pushes up to a new high. So the uptrend is played out, it has a break and a new high, but this measured move right here is still in play. So price starts attempting to reverse, as it's pushing lower here, I'm thinking, okay, this could be it for the measured move. It might just reverse on down. If we push into a clear reversal pattern, we can look to continue with the downtrend. At this point, the downtrend, the bears are competing with the bulls because the bears want the price to make a new low for the downtrend. They want it to play out like a typical trend. However, the bulls want to reach this measured move, and they just came off the overnight high. So it's kind of a competition area here. And, so I'm thinking, okay, if we push below the EMA, push below this chop right here, we can get a failed second entry. We can push through, get a couple legs back, and look to get short and make a new low for the downtrend. However, price ends up holding here, so we have to switch gears and consider, okay, price has a break from the downtrend, one attempt at a new low. So as we push up here, we can wait for the second attempt at a new low. And look, sorry, it's kind of just really cluttering here. It's kind of stressing me out. So we can wait for the second attempt at a new low in order to get in on a long. So first attempt lower, second attempt lower, and look to get long down here somewhere. However, price ends up just pushing on up, making that new high, and then, it's made a new high, and it's a count reset at that point. So you're not going to be able to get that clear second leg down anymore because it's reset. So even though it's a double top, it could push down, and then if it has a good reaction, you can look for something, but generally it's a reset. So anyway, it starts to get choppy after it reaches that high, goes sideways for a bit, we push out, small attempt to fade, but it's just a first entry. It's not clear enough, and it's right at all this resistance right here, which is, getting pretty clear forming. And so we push lower here again, it's right into this resistance. We just don't get anything in this area here. We don't get any clear two legs back. And so anyway, we push on up, which one thing I am going to mention, because I kind of glossed over it, is from this high right here, yes, there is a second entry long right there. First entry long, second entry, but again, it's just right into all of this. It was very choppy, and, it was getting very bearish right before the entry, below the EMA. It's overall not an ideal entry, even though it's off that trend line right there. So that's why I skipped it. We push on up here. If price pushes up here, we could get two legs retesting this level right here, this resistance level, and look to get long off of it and reach this measured move, because that's right, I almost forgot. So this measured move right here, since it failed to reverse after that, we have to combine the legs. And that's what gave us this wider measured move that I took down at first. So now we have this leg up, break, starting to push up here. So notice how, since price couldn't reverse after this uptrend play out, we have to combine the legs into one. No matter how separated they look, it is still one leg. And so anyway, uptrend, basically uptrend, break, pushing up to a new high, making the second leg up, two-legged move, pushing off the overnight low. So as we're pushing up here, like I said, I think I mentioned, as we push through this resistance level, we can get a couple legs back, retesting it, look for a long, but price ends up just going straight up to the overnight, straight up to the measured move. I'm sorry, I mix up my terms all the time when I'm talking. So reaches the measured move, or it comes within a tick of it, and then it just has a sharp push down. I was wanting to see two legs down to the key entry point. At the time, the key entry point was this green trend line, but price ended up breaking that, just piercing through a little bit and then pushing higher. And then at that point, it fully met the measured move where it found more resistance, kind of just chopped in that same area. And then after price pushed up there, I extended the channel to be off that swing. So I'm just going to remove this now. So now the channel looks like this. I just extended it to that swing. We're pushing higher here, and we reach the overnight high. So when we reach the overnight high, we have to consider, okay, the bears are going to want to short off of it, but we're still in this uptrend. Now, kind of like what I was explaining over here, if you come off of an overnight level, you can take a counter trend reversal pattern within the trend so long as there's room. And what do you get here? You do get a failed second entry, but it's not a very good one, especially considering it's in this uptrend. it's pushing above the EMA. It's not able to hold below, even though it's retesting that overnight high right there. It doesn't matter. It's closing above the EMA. It's getting above. It's not an ideal reversal pattern, especially when you consider the fact that it's really close to this trend line right here. I mean, this is a very clear trend. The EMA is fitting at the same exact angle as the trend. So it's clearly a valid in-play trend, and I don't want to enter short into it when it can't even get below the EMA. Ideally, what would have happened was just price push up sharper here, so that way it could give, like if it pushed out sharper here, it could just have a sharper push down and then give two legs back, closing below with more room. But it kind of just chopped to the side a bit too long, and, you know, it just did not set up very well, as you can see. So anyway, we push on up here. Fails, not a good failed second entry. Don't want to enter right into that. Make a new high. And now when we break out here, we want to wait for 2 attempts to fade before buying the breakout. Even though we're in an uptrend, we still need to consider this overnight high right here is a major key level. And so when we break out, we have to wait on 2 attempts to fade before buying the breakout. And so we only get 1 attempt here, and then it ends up just fading straight through. Excuse me. Ends up just fading straight through. And then very quickly we push back out, push back in, and now it's just kind of a little bit of a messy area. You know, when price broke this uptrend right here, it's just a small break, and more than likely it's going to end up being extended to there because it just fits along with it, as we can tell. You know, you can just kind of look and see. But you have to take it one price action level at a time. At first, what you get here is 2 legs to a new high. So price could start attempting to reverse down from here because it just met this measured move. We're getting a red bar right as it meets that. So we'll see what happens. It's going into a range, obviously, and the EMA is right in the center of that, you know. So what could end up happening is the overnight high act as a midline. It's right around the middle there. You know, I've seen that happen before, where a range just forms right in the middle of an overnight level, or right on top of the overnight level, and then the overnight level acts as a midline and then ends up becoming weak as the trend forms, or excuse me, as the range forms. And so anyway, we could get a couple legs down and then, you know, possibly get a long off these lows. I would still want to not enter directly into the overnight high because it is still a key level. But we could play this range both ways if it holds for long enough. So anyway, that's going to do it for the ES. I'm going to hop over to the NQ. Wow, I spent a lot of time on the ES. It's already been 17 minutes. Anyway, this is our overnight high. This is our overnight low down here. These are our key levels for the day. I guess I already explained that same exact concept on the NQ. We mark our overnight high levels and overnight low levels. And so, again, I started trading at 8. This area right here, we were pushing on down. Now, these 2 legs up here, notice that we have these 2 legs up. On the ES, it was a lot further broken out from this measured move right here. On the NQ, it was a bit different. These markets do generally follow each other, and they look very similar a lot of the time, but they're not exactly the same. Like, clearly it didn't go as far out, so it would have been more likely for price to push back below and then hold off the... Sorry, let me just go back to the ES one more time, because I want to just... On the ES, it held right on top of that measured move level, but here on the NQ, price pushed on through and then held on the underside of that level. So, you know, it's just important to understand that these markets are different. They don't follow each other completely. Some people trade one based off the other. Give me 1 sec. I'm going to turn off my ceiling fan because it's making a bunch of noise. Okay, so as we push lower here, what I would have liked to see was a reversal pattern, a break, a 2-legged break from this downtrend. So like this, basically, if we could have just gotten another leg like that. Sorry, give me 1 sec. If we could have just gotten another leg like that, so it'd be first entry long, second entry long, failure. You know, if it doesn't offer an entry right from that level, what could often happen is it'll push off and then form a smaller failed second entry after it gets below the EMA, and then you would look to get in on the smaller failed second entry that forms using the momentum with this measured move, the larger measured move that's in play. And so we don't get that here, but that is what I would like to see. It's a good area for a reversal pattern. That's what I would be looking for here, but very quickly after the break, it pushes to a new low. So at this point, it's considered played out. Price attempts to reverse, but gets held by the EMA and pushes down. So now we have 2 legs to a new low. Very typical. Then after that second leg down, price goes into a range. So it's very common to see 2 clear legs to a new low before price either reverses or goes into a range, which when it goes into a range like this, when a downtrend plays out, and then it just goes into a range. The reason it's doing that is because the bears still want to reach the lows here, but in the overnight range, they still want to reach the lows down here because that's how range rules work. When you come off one side, you reach the others, and the bears, are wanting to do that. However, the bulls see that this downtrend is played out, and so they want to go long because the downtrend is played out. So it's another conflict area. It's going to get choppy. Whenever there's reason for both ways, it always just goes into a chop, basically. So anyway, we start going choppy here. We break out, fade back in. We don't get a clear fade entry. We just get this second entry that's, it is holding off of those lows right there that are forming, but which at the time, at first, you're not, obviously this is not a clear channel, but after this swing forms there, you can draw it out to there, and then just kind of adjust the lows as it forms, and then when that pierces through, you can extend them again. So anyway, these lows were starting to fit, but this right here, it's just not a clear long right there, which at the time it actually wasn't. I kind of confused myself for a sec when it was right there, but it doesn't matter whether it's on it or not. It's not a clear entry. It's into that trend line right there. You want to see it actually hold back above. Even though the downtrend is out of play, the EMA is still down. It's still bearish. It's not showing any signs of reversing higher. So I don't want to enter long on that directly into it. I want to wait for it to push back in, hold above, and also be out of this trend line, which in this case it would not be, even if it formed that right there. So anyway, as it pierces through there, I just extend it after it pushes on down. And now what we have here is, so let me just draw out this. So we have this measured move in play, downtrend, break, and then that forms this measured move. And then right at this measured move, price finds resistance. So it's important to understand measured move levels because sometimes they will look very thin, like for instance right here. The first leg is very sharp, but then on the second leg, by the time it chops over all the way to over here, some people probably forget about this measured move because it's not immediately pushing down in the same angle. Like here, this is like the same angle. You have a spike up, a break, and you have another spike up. Here, it's not doing that, and so people will sometimes forget about it, think it's not significant, but as soon as price reaches that, that's when we get this two-legged move up. This is the first clear two-legged move up on this whole move down here, and it only happened after it reached that measured move. You see what I'm saying? Now, one thing I want to mention is because this area right here is the same area as a trade on the ES, and I want to compare these areas really quick because I know that there's going to be people who ask about it. So this area right here on the ES is right here. Now, I liked this entry here on the ES, but I did not like it on the NQ. On the ES, it was just a clear 2 attempts to fade with a great bearish reaction with the down measured move in play, holding off of this trend line right here. Like I said, let me show exactly how it was again. Holding off that trend line. But here on the NQ, we have this channel going within this other channel that's forming. And the measured move is already met. Here on the ES, the down measured move is still in play. So we can use the measured move as a magnet to enter short. But here on the NQ, it's already met the measured move and has a sharp push off of it. Now, we do have 2 attempts to reverse, and generally price attempts to do things in twos, like I was explaining earlier. However, it is still right into these lows right here. It's getting sideways, and overall, it's just not an ideal entry. Another thing is, in the moment, this is what I was considering. Price just overshot this channel here. Overshoots tend to lead to breaks. Price has not even reached the other side of the channel yet, and this measured move up right here, a lot of that second leg is from wick. So, and if you know about measured moves, very oftentimes the wick will end up not being part of the measured move. You just have to kind of see how it reacts to that level and then also the level from the body, because there's no wick from this first part down here. It's just straight, strong body, and then it pushed down to here. And then, so the point is, there's too many factors against this trade. It is a second entry off of this, previous level right here, this range low right here. However, this measured move, even at the wick, is still barely in play. It just overshoots lead to breaks, so I would want to see it fully meet the measured move and also reach the other side of this channel. Um, you know, but again, it's just right into the lows of this channel that's forming. It's starting to get choppy even by the time that this bar forms right here, and so I just didn't like it. And so what happens is price pushes lower, pushes pretty close to the stop right here, and then it forms another entry. This is a lower high after that second entry, but it's completely choppy at that point. It's just really sideways, and again, right into that measured move, right into these lows right here. So there's just too many things against going short here. Now, when price plummets down right here, that is this exact moment here on the ES. So this is right at 9 right here, and this is right at 9 right here. And what you'll notice is with this two-legged move higher on the NQ, if you had entered on that, it pushed pretty close to your stop. You see nothing like that here on the ES. So just because there's a good-looking entry on the ES does not mean you want to take it on the NQ as well. I know that some people do think that way. Sometimes you'll get a pullback on one market that you don't get on the other, get stopped out on one, and then it goes right to where you thought it was. And then on the other market, it doesn't do that. So, the point is, if there's a good-looking trade, then take it, but don't trade another market based on that. So anyway, that's why I did not go short here. I just only went short on the ES. Someone asked me about that. So anyway, we push on lower here, and someone in the site, if those are who are wondering. So we push on lower here, and then we push through that measured move, and then we get a small bounce here, and then we push lower and break through the overnight low. So we break through the overnight low, and we can expect price to attempt to fade. So just like with this range here, the overnight range acts similarly. We can expect price to attempt to fade back in. And we want to see 2 attempts to fade before buying the breakout. And so we only get one clear attempt right here. Obviously, it pushes right back in, it fades back in, and then makes these 2 legs down. So from the low count, we have first entry short, second entry short, and then failure. Obviously, you can't take it directly into the overnight low, so there's nothing to take there. But price ends up fading on in, pushing through, and making this 2-legged move higher. So we have uptrend, 2-legged break, push to a new high. The uptrend is now played out at that point, and it starts to reverse on down. Now here we have first entry long, second entry long. And one thing I want to mention, just in case someone's wondering about it, because you have a leg down here, leg back up, and then a push down here. You might be wondering, why did I draw it from there instead of there? And it's because it's very common for, because at first it is a 2-legged move down. First leg down, second leg, it made a double top, so it's borderline maybe a reset, but this wick is still higher than there, so technically it could count as a 2-legged move. Sometimes it's just hard to tell whenever it makes a double top, but it reacts like a 2-legged move, so that's how we know. So first leg down, second leg down. That's a second entry. We push on up here. I didn't like going long on it because, again, the chance of it acting as a reset is too high, so I don't want to go long right there. But we push on up, and then we start a second leg down. Now, since it's so close to a reset, that's why I considered this all one leg, and I just drew it from there because it's very common for, to combine the legs after a failed reversal. So when we start pushing lower here, it's clear we're making a second leg down. We hold off of the overnight low right here, and the reason I have all this marked up is because I was explaining something to someone on the site. Let me zoom in here. So we have a second entry long right here. This trend line, it was right off the trend line, which let me put it back to where it was at the time. So low, draw off that swing, and then it holds again off of it right there. So it's off of 2 key entry points, the trend line and the overnight low. And I didn't mind entering into the EMA because it had been chopping straight through the EMA. When price goes into a range and chops up and down through the EMA, that is weakening the EMA. It's telling you that the EMA is no longer acting as a resistance level. It's just going straight through it. It's forming a range. It's very common in ranges. And so I liked going long here, but again, I don't know if I mentioned this yet, but you still have this measured move in play. And so I was not wanting to push it past this swing right here because, the measured move is still in play. And these act as magnets like I was explaining, and so you just want to be careful entering against active measured moves. Now, we did have stuff going for this long here. Again, it was off 2 key entry points that are competing against that downtrend, or excuse me, that are competing against that measured move right there. However, that doesn't mean you want to push your luck. 1-to-1 is what I usually go for anyway, so there was no problem here. Plenty of room to that previous swing. But just saying, there's a reason I don't want to go above that swing in particular. It's because of this measured move that's still in play. Anyway, we push up here. Price ends up finding resistance right at that swing, just ticks onto it, and then pushes on lower here. And so what we have is downtrend, break, first attempt lower, second attempt lower. So the downtrend has 2 legs to a new low, or it doesn't make a new low, 2 attempts at a new low, and then it pushes on higher here. And I don't like going long here. Someone was asking in the site about going long. I explained to them right before I started recording. Why not enter long here or use a limit order after this bar? And the reason for that is because price has been making lower highs this whole time. I was already worried about pushing price past that swing, and so when price found resistance on it, not only found resistance on it, but actually had these bodies closing lower than it, so it's making lower highs the whole time. That is just not ideal for an entry, especially combining it with the fact that there's now horizontal resistance right here. It's very choppy in this area right here. There's kind of a range just right here. And so I don't want to expect price to push on through that. So even if, say you got in with a limit order down here, you would still need to put your stop at the swing low. And so you would just need to, use a very heavy limit order. And basically, you would take it with a limit order after this bar closes because it's closing out of that trend line right there. And I still would not want to push it past this resistance right there. So the reason I don't like entering based off of this green bar with a heavy limit order is because I don't want to push it past this resistance right there. And it's making these lower highs. Overall, it's just not a good looking entry. This marked range high up here isn't even really confirmed at this point. It does have these 2 swings here, but these are so close that basically just counts as one swing. And so it's not really a confirmed range high. So, basically I don't have good enough reason to think that price will push through right here, consistently. It doesn't look like it would consistently do that, so I don't want to take it one time here. So that's why I didn't like entering there. Just too many things going against the trade. Anyway, we push on up, and we push on up, and then since we just had this little pierce through the trend line right there, we can look to extend it to there, and then price ends up holding again on it right there, also off the overnight low. And after we break out, one thing that we want to see is 2 attempts to fade back in, so we can look to get long on the fade failure. So just like I was explaining down here, when price breaks out of the overnight low, we want to see 2 attempts to fade before buying the breakout. We want to wait for 2 attempts to fade for this range right here before buying the breakout. Now, it might not hold right off this level. I was thinking maybe it might hold off of this other level down here. But the point is we want to wait for 2 attempts to fade in order to make it safe to buy the breakout, because a fade possibility is too big. So anyway, price starts pushing lower here and ends up just going straight on through. It doesn't give any entries on the way down. If it does end up fading, you could look to get short on a small reversal pattern. Like if it pushes lower, get a couple legs back, make a failed second entry, you can look to go short. You just need room to the trend line. But that doesn't happen either. So price just pushes off the overnight low here. We're continuing with this uptrend, and then we go on up and we meet this measured move. So this 2-legged move here, breaking out of this range, that's a clear 2-legged move. And as price reaches this measured move, what we want to see is a reversal pattern down. We could get a short within the uptrend on a reversal pattern, but one other thing that I would like to see is just 2 legs down to the key entry point, 2 big legs to the key entry point for a long. I'm going to draw this out real quick just so I can show here. So one thing we could get, like I just said, is these 2 legs down off the key entry point. Big second entry could give us a great long. However, there is another possibility. It's not always going to give you 2 perfect cookie cutter legs down like that. So another thing that could happen is you get a downtrend, and then you get a break. This is the break, so downtrend, break, and then after that you get two smaller legs to a new low, but the smaller legs are measured. So now it would be like downtrend, break, first attempt lower, second attempt lower, measured to the key entry point. Now, obviously it might be a little hard to visualize here, and this is not drawn out perfectly. This is just quickly drawn up with the arrows, but basically this is another possibility of what could happen. Downtrend, break, and then two measured legs to a new low off of the key entry point could offer a great long. So I'm going to draw it. Actually, I'm not going to spend too much time on that. I kind of just drew that really quick there, but you see what I'm saying. You could get a big two-legged move down, or you could get a downtrend with a break and two measured legs down to a new low off the key entry point for a long. Anyway, we break on out here, or I shouldn't say breakout. This is an overshoot, because when you're in an uptrend and it breaks out the highs, that's an overshoot. That indicates oversold. I probably should have explained earlier when I was talking about an overshoot. Overshoots indicate overbought. In the case of an uptrend, overbought. In the case of a downtrend, oversold. And so some people use indicators, like RSI or whatever. They use the 30-70 levels. And I'm not knocking anyone's methods, but if you learn how to read the chart, you can tell when price is overbought and oversold just based on the price action. If you're in an uptrend, ideally it goes from side to side. That's a healthy trend. If price is pushing out the highs, that's indicating that there's a lot of extra buyers coming in, so many that it's pushing through the already established uptrend. And so that indicates overbought. Now when price pushes on through here, we immediately, at first it gets a little choppy, but after we get another spike up, then we get a sharp push in, attempting to return back into the channel here. And really what it's trying to do is trying to reach the other side of the channel, trying to get to those lows. And we get first attempt, make a couple legs back, and then we get our second attempt. So everything happens in pairs of twos. We have this two-legged move up, and then after it broke out, we have two attempts to push back down, and between the two pushes down, we have a two-legged break from this push down. So everything happens in pairs of twos. It's just how the market works. And, obviously it doesn't reach this measured move. We don't get any entries. It's just, a long entry floating in the middle of this trend right here. So we don't want to take that. We don't know that it's going to push up like that. The down measured move is still in play. It's not off of any support. I mean, it is kind of retesting this measured move level right here, but that's not enough because it is getting significantly below it as well. Let me draw it out real quick. It is closing back above, but it pushed heavily below it, and you just overshot. Overshoots lead to breaks. Overshoots lead to reversals. There's too many things against this right here. Even if it's had a perfect hold right off that right there, I still would not like that. So anyway, we push on up here, pushes straight out of the channel again, then we get this another more of a choppy attempt to push back down, only one leg, so nothing to take there. We push up again, another first entry, very small that one, and then we break out of the overnight high. So when we break out of the overnight high, again, we want to wait for two attempts to fade before buying the breakout. But if we do fade, then we want to see a reversal pattern. We could get a failed second entry soon. So something like this. So something like that, first entry long, second entry long failure. And obviously it might not set up exactly as drawn. It might set up bigger. It might set up more wonky. It might set up more thin. So whenever I draw these out here, it's just a general, more of a cookie cutter example of what could happen. And you kind of just got to really study the charts to see all the intricacies and all the different ways that, these trades set up. And sometime it might form a failed second entry that's totally invalid and then completely go on down anyway. So anyway, that's going to do it for this video. I hope it helped out. This is more of a longer video. This one's almost 40 minutes. But yeah, I really hope you enjoyed it. I hope you had a good time watching it, and thanks for watching. I'll see y'all next time.